Hi, I am Soumya Jain. Welcome to Weekly Economic Insights, where we discuss the latest news and updates that affect your personal finances. In today's segment, we'll begin with an expert's view on the SEBI's new study on IPO investors. A new SEBI study shows that over 50% of IPO investors sell their shares within a week of listing. The study looked at 144 IPOs from April 2021 to December 2023. When IPO returns were over 20%, 67.6% of shares were sold in a week. But when returns were negative, only 23.3% were sold. Many new investors are joining in, with half of the demat accounts that applied for IPOs being opened after COVID-19. September 2024 was the busiest month of IPOs in 14 years. Over 28 companies have entered the market so far. India had the most IPOs globally in the first half of 2023 to 24, making up 27% of all IPOs. This was led by small and medium enterprise IPOs. The RBI says this IPO craze has raised concerns about companies' owners selling at high prices. To address this, rules have been changed to control oversubscription in main IPOs. Let's hear what our expert Akhil Rathi, SVP Financial Concierge at One Finance, has to say.
Thanks for having me. See, the recent surge in IPOs in India has seen a dynamic shift in the markets. Particularly, India is the largest SME in the world, and what we saw in August month, SEBI IPO attracts around 1.6 lakh crore in bids against around 647 crores offerings. So this speculative mentality is often fueled by media hype and FOMO, which can lead to significant volatility. What I've seen, the primary market has given enough opportunities to the companies in terms of raising capital, but it has also raised concerns about promoters utilizing their opportunity to offload their holdings at elevated price, and especially in the SME segment. And recent SEBI studies also shows that 50% investors sell their shares within first week. So this data clearly shows that investors are not long-term players. They just focus on short-term profits and all, and they're pulling their losses till long-term. And what we have seen in the past, that during the bull market phase, around 50 to 60% companies only survive during that phase, which clearly shows that the valuations are not necessarily aligned with the fundamentals of the company which is going public. As more retail investors will be coming into the market, I would definitely say that they should have a disciplined approach. They should research about the company before applying, in terms of financial health, in terms of business model, as well as competitive advantage, and what are the risks involved. Recently, I have seen NBFC has launched an IPO. People have applied a lot of amount in the IPOs and all. So, and in 2008, we have seen the largest IPO got stuck, and investors have lost good amount of money and all. So, over concentration should avoid. Investors should focus on company, what company is doing, what is the future outlook of the company before applying it. So I would say this trend will continue. The IPOs will be coming into the markets in the SME segment as well as in the primary markets. It's better that you should read about companies' RHP before jumping into applying for the IPO. Also, I would definitely say to all retail investors as well as HNI investors that they should have some goals with regards to their investments. Generally, people apply good amount of money into a single IPO. They have a concentration risk and they don't know whether to hold or whether to sell. So it's better to have a short-term and long-term approach. They should keep their investments according to their goals and according to their needs. So it's better to have a detailed approach, disciplined approach before applying into the IPOs. And I would like to say at the end that it's not whether you are right or wrong that's important, but how much money you make when you are right and how much you lose when you are wrong. So as an investor, you should always keep these things in mind. Thank you.
Thank you for sharing your thoughts. Now let's look at how India is doing in the global market ranking. India has become the 6th largest market in the MSCI All Country World Investable Market Index, moving ahead of China. India's weight in this index is now 2.35%, while China's is 2.24%. India is just behind France by small margin. Since early 2021, China's weight has dropped by half, but India's has more than doubled. India is also now the top emerging market in the MSCI Emerging Market Index. Experts say this is because India's economy is growing fast and the government is stable. Jonathan Garden from Morgan Stanley points out that India's growth rate is more than 3 times higher than China's. This change could bring more foreign investments to India, which might create more jobs and increase people's income. The Indian economy is doing well, with foreign direct investments growing by 47% in April-June period of FY25. Let's move on to some changes in tax deduction rates. There will be new TDS rates starting tomorrow, October 1st, 2024. For certain payments, the TDS rates will drop from 5% to 2%. This includes life insurance payouts, lottery tickets, commissions, broker fees, and some rent payments. For e-commerce payments, the rate will go down from 1% to 0.1%. This change will help online sellers, especially smaller ones. These new rates will mean people and small businesses will have more cash to use. It might also encourage more online businesses. The government is doing this to make taxes simpler and reduce the financial impact on people. These changes will affect different sectors like insurance, real estate, and online selling. It's important for taxpayers to know about these changes so that they can plan their finances better. Let's see what new rules SEBI has introduced for IPOs. SEBI has made new rules for public issues of debt securities. From November 1st, 2024, individual investors applying for up to Rs 5 lakh through intermediaries must use UPI for blocking funds. They need to provide their UPI ID in the application form. This change is to make the process more like equity IPOs. SEBI has also reduced the minimum subscription period for debt securities from 3 to 2 working days. If prices change, the bidding period can be extended by 1 day instead of 3. For companies already listed, the time for public comments on draft offer document is now just 1 day. For new companies, it's 5 days. These changes aim to make the debt market more appealing and speed up the process for companies to get funds. Now let's look at a plan to handle unclaimed bank deposits. Public sector banks in India are working on ways to quickly return unclaimed deposits to people. They'll study why deposits are left unclaimed and where this happens most. The banks will use detailed analysis, geographic trends, and devise tech-based solutions to solve this problem. They have 6 months to give their ideas to Reserve Bank of India. As of March 2024, there were 78,213 crore rupees in unclaimed deposits, which is 26% more than last year. Banks have to transfer money from accounts that haven't been used for 10 years to a special fund. The government is also making it possible to add up to 4 nominees for each bank account instead of just 1. This should help reduce unclaimed money. The RBI has a website called Unclaimed Deposits, Gateway to Access Information, where people can search for their unclaimed deposits. Finally, let's look at new scheme to settle tax disputes. The government is starting a new scheme called Direct Tax Vivad Se Vishwas Scheme 2024 from tomorrow, October 1st, 2024. This scheme aims to settle ongoing tax disputes quickly. It covers disputes pending as of July 22, 2024 in various courts, including the Supreme Court. The scheme offers lower settlement amounts for new appellants and for those who filed by December 31st, 2024. Taxpayers need to fill out special forms to use this scheme. They can do this online on the income tax website. This scheme doesn't cover some cases like those involving overseas income or search and seizure. The government hopes this will reduce the number of tax cases in court and help settle dispute faster. That's a wrap for this week's Economic Insight. We've explored major shifts across various sectors, reminding us just how dynamic the financial landscape can be. Stay informed to navigate these changes and make informed decisions about your financial future.